What's going on? What's going on, team? Welcome back to another week. Welcome back to another weekly stock talk. My name is Xander with Feytser Trading Academy. And if you're new here, make sure to smash that like button and subscribe. We do these videos every single week. What we'll be going over this week is we'll be talking about the SPY and we'll be talking about the NASDAQ. We'll break down where they are at from a technical standpoint. And then we'll also cover 20 opportunities that are being presented this week. So if you guys are interested in this, or if you guys are interested in this kind of content, make sure to subscribe and make sure to follow along throughout the weeks to come. So the first thing that we're going to be taking a look at is we're going to be taking a look at SPY, which is SBY. First things first, we're seeing that we're approaching this resistance level right up here around 441. We keep on getting rejected at this level. That would make sense based on a few weeks ago where we had this rejection and we had that sell-off down to the SMA level. And now we just recovered, and now we're having a little bit of a struggle here breaking through that resistance. That being said, we are taking a look at the RSI, and with the sell-off on the RSI, we might become oversold while we are consolidating at this level, which could allow us to push higher. However, if this level does not hold up, we'll probably see another sell-off down to this SMA level at 433 approximately. So it shouldn't be too big of a sell-off. However, it's definitely a possibility, to say the least. So that's something to watch. We have been doing fairly well over the last week. We've just been consolidating at this level. So, RSI is not very overextended. We're not very overbought. So it's not looking too bad for the SPY. And the MACD is definitely looking like we are selling off a little bit as of right now. However, what we're actually doing is we're just consolidating. So like I said, this could go either way. What you should be watching is this resistance level that is currently acting as a support. And we have been, finding support at this level while we're consolidating. So this level is approximately 437. So as long as we're above this level, we should be looking fairly good. And going forward, we should see higher highs. Taking a look at the NASDAQ, we're going to be looking at /NQ. Very, very similar setup here. We have just been, basically consolidating at this level. We've been holding this 50 EMA, and we've been holding above the 180-day and 200 EMA. So, or SMA. So, very similar setup here on the RSI and the MACD as we saw on SPY. So we're kind of in a bit of the same place as far as the overall market is going. We haven't been seeing too much action. We have been seeing a lot of earnings coming out. So, we really should just wait and see how this all plays out. That being said, though, some of the stocks that we're going to be taking a look at, some of the tickers, they have earnings coming up or the earnings just passed. And so that either is presenting an opportunity or it will present an opportunity. So make sure to follow along and follow up with these stocks either on a daily basis or every other day, however often you're trading, or if you're investing, however often you're trying to take profit or enter a position. So that's what's going on with the SPY and the NASDAQ. So let's take a look at the first opportunity. We're going to be looking at Pinterest, which is PINS. This one, we did have earnings just not too long ago, about 2 days ago. We had earnings. This sold off fairly big after earnings. And it's not that, the earnings were bad necessarily. Oftentimes, these companies do meet expectations. However, their revenue isn't doing so hot. And so, a lot of people end up selling off or the price just drops on this particular ticker right during earnings or after earnings. So that's why you really want to follow up with these stocks right after earnings. Like we go over in the academy is, you don't want to trade into earnings. You want to trade after earnings and react to the trade, not, try to predict what's going to happen. So in this case, we saw a sell-off. We ended up selling off down to the support level. And so we've just been consolidating at this support level. We are starting to look like we're turning around here on the MACD and the RSI as well. We are very, very oversold. So from current levels, if we're looking to where we were before earnings, we're looking at about a 25% recovery, right? And so, this stock has been doing very, very well and consistent over, a period of time now. It's been, a few months now. I'd say it's probably around 6 months that we've been seeing this very similar pattern where we, run up, we sell off, we run up, we sell off, we run up, we sell off. And so, you know, it's prone to recover for sure, in my opinion. And so, you know, coming down to the support level, which has been acting as a support back in, you know, May as well, you know, I believe that this would be a great buy opportunity if you're looking to invest in something like Pinterest or a company similar to this. Obviously, you'll have trade opportunities on the way up on the recovery. So definitely waiting for confirmation. If this thing breaks about 6109, 6109, 6120, once we break this resistance level, that will break the EMA as well, which is just going to be more of a confirmation of a reversal to the upside. So that's what's going on with Pinterest. The next one we're going to be taking a look at is Facebook. You really want to be looking at blue chip stocks here, right? You know, when we see market sell-offs, the best thing you could do is invest in blue chip large cap stocks, right? So Facebook, same thing. You know, we had a bit of a sell-off right after earnings, and we came down to this SMA level where we consistently see a bounce at this SMA level. We saw a bounce here, saw a bounce here, saw a bounce here, saw a bounce here. Now we're back down to this level again. And, you know, based on historic patterns, we tend to bounce at this level. Does it mean it has to? Absolutely not. That's why we have risk management. However, you know, as an opportunity, this is definitely one to be paying attention to. We're looking at about 7%, 6.57% as a recovery to previous highs where we were. So Facebook, same situation here. We're not super oversold here on Facebook. However, we are very close to this SMA level. I'd be looking for an entry around this SMA level, approximately 347. We're at about 351. So around 347 is where I'd be looking for an entry, or as soon as we start seeing a recovery to the upside and with confirmation of higher highs, right? Also pay attention to the MACD. You know, it looks like we might still have a little bit of a downside, which would make sense for us to come down to this SMA level. So that's what I would be paying attention to with Facebook. The next one is going to be Amazon. AMZN. Very, very similar setup. So, you know, if you're seeing the pattern here, this is how we're reacting to these earnings, right? We see what happens on earnings, and we've seen the historic patterns, and we're now being prepared and getting prepared for these recoveries that tend to happen on these particular stocks after earnings happen, right? So sell off, very similar setup, became very, very oversold, and we're starting to curl up here on the MACD. So it looks like we're going into a recovery. You know, ideally, you want to wait for confirmation of break of this EMA to the upside. However, definitely one to pay attention to. This is definitely going to be a resistance level or a support level now that we're at currently. So it would make sense for us to see a recovery at this point as well. So that would be that level based on these historic patterns, right? So we had a bounce here. So it would acted as a support here, acted as a resistance here, resistance here. We broke through that, came back up, and now we came down during these earnings, we came down right back to this support level. So we're currently at support. This is a critical level. So if it does break, potentially going to sell off to approximately 3160, 3165. However, you know, Amazon is a very, very strong company. And just because earnings, you know, reacted this way, people reacted this way to earnings this time, you know, if we look at, you know, the pattern, it's very, very consistent. It's a consistent uptrend pattern. Let's take a look at a daily chart. You know, we're consistently just trending higher and higher and higher. So this sell-off, you know, is more of a dip buy opportunity in my opinion. So the next one that we're going to be taking a look at is going to be, it's going to be VALE, V-A-L-E. This one, very similar, you know, uptrend pattern. This is what we like to see, trending with the SMA to the upside. Saw every time we dip down close to or below this SMA level, we end up seeing a bounce, came down, bounced, came down, bounced, came down again. And, you know, obviously this happened because of earnings. We're looking at the RSI, we're starting to reverse here to the upside after being oversold. We're starting to reverse here on the MACD as well. So, you know, it would make sense following the historic pattern that we would recover here. Recovery that we're going to be taking a look at and expecting on VALE is going to be approximately 8.4%, 8.5%. And if we continue with the trend that we've been in right now, we're just going to make higher highs. So that could be a bit higher. So that's what we're watching with VALE. The next one is going to be SBUX, SBUX. This one here, we have been selling off ever since earnings a few days ago. We've been selling off. We ended up selling off down to this support level here based on this recent high that we had. And it would actually come down to even this high right here. So this comes down to this support level. We had this resistance, again, and then we broke up to the upside. What was a resistance now becomes a support. So now we're watching this as a support level. This also lines up with this trend line, this bottom channel trend line that we're seeing here. So if we do see a bounce, we are fairly oversold, not super oversold, but fairly oversold. And combining that with the fact that MACD is starting to look like it's turning around, I would expect this to, obviously make a recovery, break to the upside. Once again, make sure you're paying attention to the EMA for confirmation to the upside. The potential that we're looking at here is going to be approximately two recent highs. We're looking about 5%, 5.3%. As always, guys, make sure that you guys are managing your risk with these. Make sure you have your risk ratios set up before you are trying to, jump into any investment or any trade. So make sure that you guys are doing that. The next one that we're going to be taking a look at is DraftKings, DKNG, or DraftKings. Here, we're seeing like we're finding support here on the 50 SMA. We're starting to head up to the upside and finding support. It looks like we're trying to break through this SMA line here on the 180-day and 200-day. And once this 50-day SMA breaks above it, that's a golden cross. So, that's an indication that we're starting to potentially trend to the upside. If we're looking from current price points to the recent highs that we saw, we're looking at about 33%, 34% to $74. We're trading right now at about $49. One thing I do want to say is be aware that earnings are on the 6th. So, you can definitely prepare yourself, but I would say make sure that you wait for earnings to happen before making a decision. Because, as we've seen before, things can be very well and go very well for a company. However, the price is still going to drop. So what we want to see is great earnings, and we also want to see a great reaction to those earnings. And then we just want to ride that wave. Right. So that's what I would say with DraftKings. The setup is very good. The sell off, the profit potential is really good. The only thing is we have earnings coming up. So I would wait for those to come out. And then I would react and ride the trend, whichever way it's going. Right. If it's going to start dropping, we can definitely get a better deal and a better opportunity. However, as of right now, this is set up to be very well. And if the earnings, play out the way we want them to play out and we start seeing a run up, that would be a great time to jump in on it. So pay attention to this one on the 6th. The next one that we're going to take a look at is going to be UPRO, UPRO. This one here, a bit of a sell-off here happening. Consistent uptrend pattern. We love this. We continue to see a bounce here on the 180-day and 200 EMA or SMA. We consistently see a bounce here on these levels. Once again, bounce, 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 bounce. And now we're seeing a bit of a drop here. However, it's not significant. So I would expect with UPRO to consistently uptrend to the upside as we've seen over the last, 6 to 7 months. However, the most ideal point of entry would be somewhere near this SMA level. So at current price points, at the current moment, the best investment would be at 115. We're sitting at about 120 right now with this little sell-off that we saw. So 115 would be ideal. However, this has been consistently trending to the upside. So this is not one that's super oversold. However, this is definitely an opportunity that consistently grows and consistently keeps going to the upside. So definitely one to add to your watch list and pay attention throughout this month, throughout this week for sure. The next one that we're going to take a look at is going to be UPS. This one, earnings happened very similar. Like I said, the pattern is very similar to the ones that we're looking at right now. We're really paying attention to what has pulled back after earnings, and that's what we want to be taking advantage of. So UPS pulled back quite a bit. We pulled back approximately 9.5, almost 10% here. And then we've just been consolidating at this point. It looks like we're trying to break here to the upside above this EMA, which would be a confirmation of a recovery. We are very oversold. MACD is looking like we're starting already an uptrend. So once we get confirmation of this EMA break, this is definitely one to pay attention to and, potentially take advantage of if you see value in this particular stock. 9.3% to recent highs, and then all-time highs, we're looking about 11.8% recovery on this one. The next one that we're going to be taking a look at is going to be WYNN, WYNN. This one, not super oversold. However, we have been seeing quite a bit of a sell-off here happening over the last few weeks. about 28.5% of a sell-off. We do have earnings coming up here on the 4th. So that's in 2 days from the current moment of this video coming out. So in 2 days, we have earnings coming out. So we'll really want to be paying attention to how the market reacts to these earnings. And we might potentially start seeing a recovery if the earnings, pan out and they're doing very well. We'll probably see, a pop to the upside. However, this very well could continue to sell off. We are currently sitting at the support level right here based on historic patterns here back in January, end of January, February. This is a support level right here. So that's what we ended up selling off to. So I wouldn't be surprised to see a bounce if this does do well on earnings. However, this could very easily, like I said, break down lower, and we can continue to see a sell-off, but definitely one to watch this week and add to your watch list throughout this month for sure. We have highs of 143. So if we do see a recovery to the upside from current price points, recent highs will be looking at about 27%. All-time highs, we're looking at about 31%. So make sure to add this one to your watch list as well. The next one we'll be taking a look at is going to be NFLX, Netflix. So this one here, we ended up pulling back down to this SMA, the 200 and the 180-day SMA. It looks like we might be going into a death cross here. So we might have more potential for a sell-off. This isn't one of the most prime setups. However, let's go ahead and extend this bottom channel trend line. So this one here, we could potentially see more of a sell-off if we do end up seeing this death cross happen. We might see more of a sell-off go down all the way down here to 482. So this is one to watch. We might see a bit of a bounce. However, we might actually end up seeing a sell-off. So one to add to your watch list. However, be cautious with this one because this one does have some downside potential, especially if we, continue to sell off. We'll see, more oversold than kind of in between where we're at right now. We do look like we might be curling up to the upside. However, MACD is not looking too great, but definitely one to still add to your watch list. The next one we're going to be taking a look at is going to be CHWY. This is CHWY. So this one's been pretty consistent. We had a nice hold above the SMA here. To the upside, we ended up breaking down here in February. We stayed below the SMA for some time all the way through June, ended up breaking above the SMA once again, the 200 SMA, 180-day SMA to the upside. And we've been pretty much trending above this SMA for pretty much the entire time. We are looking like we're going into a potential reversal here on the MACD. RSI, we're not very overbought or very oversold, but definitely one to pay attention to just because of the consistency. We're continuously making higher highs, and higher lows. We are above the SMA. This is definitely an attractive one to potentially see a continuation as we've seen right in the beginning of this year and the end of last year. We've pretty much just trended above this SMA. So definitely one to add to your watch list. We do have the potential of approximately to all-time highs. We're looking at about 28%. So that's the profit potential. However, I'd definitely be managing my risk here at the SMA with approximately, 4.7%. And that would be approximately $80.35. So that's what's going on with CHWY. The next one is going to be HD, Home Depot. This one, we ended up seeing a little bit of a pullback down here in May, beginning of May. We saw, a pullback happen, broke below the SMA line. And then we ended up seeing a little bit of consolidation, and then we started breaking back to the upside above the SMA line. We've been holding above it. We've been holding above the 50 SMA as well. So definitely one that's very attractive. We continuously made higher highs for, pretty much 2-3 months. We were just trending to the upside, and it looks like we're starting to continue that trend again. One thing I would note is we do have earnings coming up here on the 17th. We are looking like we're potentially, reversing to the upside here on the RSI. We're not super overbought, so this one definitely has room to run. We're only at 327. We had highs of 345. So from current price points to those highs, we're looking at about 5%. And I would probably be managing my risk right below the 50 SMA here, this purple line. MACD, once again, also looking like we're potentially going into a reversal. So definitely want to pay attention to this one. These levels up here, what I would be watching right about here is we're pretty much approaching this resistance level that we had back in, this was April. About mid-April, we had this resistance before we ended up breaking to the upside. And that's pretty much that area, the general area that we're in right now, where we're having a hard time breaking above it. So that's the area to watch. If we do, have a hard time breaking above it and end up pushing down, we're probably going to come back down to this support level down here at approximately 312. So be aware of that. Definitely great play. If you see the value in Home Depot and everything that's kind of going around regarding, material and the price points with how expensive things are getting. The next thing that we're going to be watching is going to be Z for Zillow. This one here, this is definitely one to pay attention to because of earnings. Earnings are coming up here on the 5th. So, we might have a positive catalyst that's going to push this at least to, 126 or potentially 143. However, we are sitting at this support level that we've been pretty much formed at since May. And we've just kind of been trending at this support level. We're pretty much at the lowest point that we've been in for some time now. So definitely one to pay attention to, not only for trading, but potentially investing as well. So this definitely has a lot of potential to recover. This one I'm watching with the profit potential to recent highs, we're looking at about 25%. All-time highs, we're looking at about 48%. So definitely huge profit potential. And as far as risk management goes, probably managing risk down here at 104, 103, just because that is the support that we've been holding. It's a very strong support level. And I wouldn't, unless earnings are really bad, I wouldn't expect this to drop too much further. If it does sell off, maybe just to the support level. However, with earnings, definitely one I'm paying attention to, because, like I said, if there is a positive catalyst, this can definitely take off and the profit potential is pretty massive. So this is definitely one to watch and add to your watch list this week. The next one's going to be GoPro, GPRO. This one here, we are starting to see, potential reversal happening here. We aren't at a very, too much of a critical level, I wouldn't say. However, we did break below the support level that we were, a bit consolidating around. That was also the SMA level. And now we're kind of just consolidating here between 996 and pretty much that resistance level that used to be a support. So we could draw out here this resistance level or this support level that we've been at. And so, like I said, earnings, once again, earnings coming up on the 5th. This one definitely has a lot of profit potential. I would be managing my risk just below 992, probably 970, 950-ish. And you have the profit potential to that first resistance level is approximately 7.3%. And then recent highs, we're looking at about 23.7%. And then all-time highs, we're looking at about 27.34%. So earnings on the 5th, that is what we're going to be watching, how the market and how this particular ticker reacts to, what happens on earnings. So not very overbought, not very oversold. We're kind of in between. So like I said, the play here is to watch what happens with earnings and then just be a reactive trader and react and follow the trend, whichever way it's going to be going. So definitely a lot of profit potential. The risk, fairly minimal if you're managing it properly. But the profit potential is fairly big. The next one that we're going to be looking at is Shopify, SHOP. This one here, we ended up pushing up to 1660, ended up pulling back down to the support level that we've had established pretty much since those highs back in February. We ended up pulling back, and this was right after earnings too. So, nothing too sharp on this one. However, we did have a little bit of a pullback. It looks like we did find support here on this support level. And then we ended up breaking above the EMA today, actually on Monday. So that's also going to be breaking above the 50 SMA. So as we're breaking to the upside, obviously we have plenty of room to run here on the RSI. This is very attractive. That's a good indication for us. Volume is doing fairly good. And the MACD as well, we're starting to go into a reversal to the upside. So I wouldn't be surprised to see this push up to 1660 potentially. As of right now, that would be that resistance level that we'd be watching. 1660, that would probably be, approaching that level would be take profits at that point. But definitely a lot of potential here. We're looking at approximately from current price points to that 1660 mark, we're looking at about 8.63%. And then obviously be managing your risk. I would be managing it right below this 1490 level, which is that support level. So, probably 1477-ish. Whatever your risk tolerance is, obviously 1 or 2% would be the most conservative way to do this. However, just pay attention to that. Also, you can just manage it right underneath that EMA. So profit potential is there and risk management is there as well. The next one is going to be KMX, and this is CarMax. So this one here, we're just pretty much hugging this resistance level. We've been doing that for some time now. This one, we have some room to go here on the RSI. So I wouldn't be surprised to see this thing push a little bit higher. But looking at the daily chart, if we're looking at the daily chart, it looks like we're potentially going to start breaking to the upside. I wouldn't be, too optimistic about it. However, definitely want to pay attention to, because once we do break above that, that's going to be, that's going to be open skies for, potentially new higher highs. So definitely want to keep on your radar and pay attention to for sure. There's nothing crazy as far as technicals going on with this, besides the fact that we do have some room to run still on the RSI, and the MACD looks like we are going into, the upside. So if we do break above this resistance level and we hold this EMA level and the 50 SMA, then we're definitely going to be doing very, very well, potentially making higher highs. So definitely want to add to your watch list if you don't have it, and pay attention to this one. The next one is going to be Google, GOOG, and that's Alphabet Inc. So this one, pullback with earnings, very similar setup to everything else that we've been, paying attention to. One of those setups, we ended up pulling back because of earnings. We pulled back to this 50 EMA or 50 SMA, and we've consistently been bouncing here on this SMA of the 180-day and 280-day. So make sure to, obviously we do have a little bit of room potentially to pull back another maybe 3.8%. However, Google is a very, very stable company. RSI is looking very good. Looks like we have plenty of room to run here on the RSI before we come overbought again, which would be an indication for another pullback. But as of right now, we're looking fairly good. And the MACD looks like we're starting to curl here, right over here. We're starting to curl and potentially going to start bouncing off of this 50 EMA and start heading to the upside. So definitely one to add to your watch list. Google, just like Amazon, very, very stable company, very, very predictable. So, definitely consider this as an opportunity for you. The next one's going to be BIG. This one's Big Lots. This one has been pulling back for some time. This is fairly oversold here on the RSI. Last time we were oversold here, we ended up pulling back. We became oversold. We ended up seeing a nice bounce here. We pushed up 10%. So once again, we are at a very oversold level. So this one right here, I wouldn't be surprised to see another push potentially up to this 50 SMA. So that would be approximately another 7.5%. We have been getting rejected from this 50 SMA. So, I would expect to be taking profits at the SMA. I wouldn't be expecting this to recover all the way to 73 or even the 200 EMA, 200 SMA. MACD is looking very, very good. Like we're potentially going to start curling and add that with the SMA or add that with the RSI. And that's going to be a very prime setup for a potential push. Like I said, approximately 7.8 or 8%, 7.9, 8% is what we'd be looking at with BIG. The next one is going to be USAC. This one here, earnings are coming up tomorrow here on Tuesday. It's going to be on the 3rd. We're starting to curl up to the upside here on the MACD. Very oversold here on the RSI. Like I said, with most earnings, once again, make sure to wait for earnings to come out and then react to it. Don't try to predict it, even though we have a very good setup and it looks like we are going to definitely recover. And we could very possibly recover another 11.63% and come back to, you know, where we were previously. Very consistent uptrend pattern. So this pullback is very attractive. The RSI is very attractive. MACD is very attractive. The only thing is earnings. And once again, we want to be as accurate as possible. So I would personally rather wait for earnings to happen, and then I would jump into it. Are you going to miss out on a little bit of profit? Absolutely. But at least when they come out and it continues to push up to higher highs, you're going to be confident that that was a good investment and you're not gambling. Rather, you're trading, and you're trading with, you know, an educational or an educated prediction as to how this is going to go. So, you know, like I said, wait for earnings to come out and then take advantage of this. If it continues to push up, you know, we still haven't broken the EMA. And if tomorrow, if earnings, you know, earnings are before market open. So, you know, pre-market, if we do break above the EMA, you know, definitely one to consider for a potential play here on USAC. The last two are going to be ETSY, ETSY. This one here pushed back all the way down to this SMA level. Very great setup here on the MACD. We do have earnings coming up here on the 4th. So not tomorrow, the day after. Once again, very similar to what I said previously. Wait for earnings to come out to react. The setup is looking very good. And, you know, everything's starting to line up. We have bounced off of the SMA before, and it looks like we potentially might be bouncing off the SMA again. But we do want earnings to confirm that for us before we jump in. We don't want to gamble, but we want to trade, and we want to trade based off of facts and what's actually happening, not what we want to happen, right? So once again, profit potential here to recent highs, we're looking about 11%. If we recover all the way to 251, that's about 24.85%. And I would be managing my risk right below this SMA level here. So, and that would be 184.55 approximately. So definitely one to add to your watch list and pay attention to this week. And the last one's going to be PayPal, PYPL. Huge pullback here happening because of earnings. Once again, very oversold. And the MACD is looking very good. It looks like we're starting to curl up to the upside. So with this one, once again, fairly consistent uptrend pattern. We've been sticking above the SMA for the most part. So this pullback here looks like something that, you know, might have been similar to the last earnings that we had. We had a pullback happen right below, and then we ended up seeing a nice recovery all the way to 312. Once again, pulling back right after earnings. So earnings pulled back, earnings pulling back. And so after that, you know, we're looking for something to start recovering to the upside. And this looks like a really good setup. So I would give it a few days, try to find, you know, a time when it's consolidating. Once it starts consolidating, we start seeing higher highs. That's going to be more of a confirmation along with the EMA, which is this blue line here. Once we break that EMA to the upside, that is going to be our signal for an entry and to continue riding this recovery to the upside, as PayPal has been going to the upside pretty much over the last half a year to 7 months, 8 months that we've been just heading to the upside. So that's going to be it for this week's Stock Talk, guys. If you guys found any value in this video, in this session, in this material, make sure to smash that like button. If you're not subscribed, make sure to subscribe. We do these videos every single week. And if you guys, like I said, found this valuable, make sure to share this with a friend. That way they make more educated decisions regarding their investments and their trading. And I'll see you guys on next week's video.